Hello ladies and gentlemen, it is the Wonder Kid. A warm welcome to this video, guys. Today's video is going to be such a strong and powerful video for you guys when it comes to trade management and trade exiting, right? Now, for those of you guys that have a set rule when it comes to exiting your trades, for example, I exit at a risk to reward ratio of 2, or I exit at a risk to reward ratio of 3, or I'm using Fibonacci and I take my profit at the 0.27 or 0.68 extension. That's completely fine, guys. If your backtesting results shows you that that is working and it gives you consistently profitable results month in, month out, then by all means go ahead, use that and continue to use that. But guys, I have received a lot of messages from you talking about saying, hey, my strike rate is good, I'm getting a lot of winning trades, but essentially my RR is low, like it's 1 or 2, and I'm not coming out in the month or finding consistency in profit at the end of every month, right? Now, to me, when I first started to learn to trade, as you guys know, I did baby pips. The one management rule that I thought was tremendously powerful, and I don't know any other management rule or exit strategy rule that is more powerful than this, is the trailing stop loss, right? Now, the reason is very clear why a trailing stop loss is so powerful, okay? The main reason is because it lets you let the market decide when to take you out. Think about it, guys. For example, if you're using Fibonacci and you're entered a winning trade, like the trade is winning, it's at an RR of 1, and you know that it's continuing up to your Fibonacci extension level. Once you exit the trade, right, at the 0.27 or 0.68 extension, the trend may continue, and essentially you might have left a percentage on the table. You might have exited at a reward ratio of 3 when it's gone up to 7, 8, 9, 10, 15%. Like, all of that is left on the table. And the thing is that will have a psychological impact, right? Whereas if you guys used a trailing stop loss, if you're a trend trader out there and you use that kind of stop loss, you're ultimately letting the market decide, so you don't have a complaint, right? Because if you're a trend trader, you want to be managing with the trend, and if the trend reverses the direction, takes you out with your trailing stop loss, then you have no complaints because the market is changing direction in terms of trend, and you have no complaints, right? So to me, the trade management and trade exit rule has always been a trailing stop loss. By far, it has been one of the most powerful ways to exit a trade, right? So for those of you guys that don't or haven't used a trailing stop loss, we're going to hop on the charts right now. I'm going to show you why it's very powerful and why it helps to minimize your emotions, right, guys? So guys, let's hop on the charts. As you can see here, I've brought up a chart of New Zealand dollar, a Japanese yen, or NJ. And as you can see, guys, we're in this kind of descending channel. You can see that very clearly, right? Now, for those of you guys that remember, like even in baby pits, that you have this kind of squeeze here, you can see that we're coming down in this kind of direction. We're having a squeeze here, so we're anticipating a move up or a move down. Okay, now for me, in my strategy, or what I can actually see, guys, is that we have this kind of zone here. We got this support level here, right, guys? And to me, this has been tested about 4 times. Okay, so we can see it's been tested once, twice, 3 times, and 4 times, okay? Now, for me personally, in my strategy, I'm anticipating a move up depending on what's happening next, okay? So let's see, for example, what is happening next. So we can see, guys, all right, we've got a candle, we've got a doji printed there, we've got some momentum coming up, and now we've got this candle here, right? Now, so for me personally, in my strategy, I would be looking to go long at around this position here, okay? So I'll be setting in my order here. I'll probably have a 15 pip, or actually I have a 12 pip stop loss with this pair, so I'll be putting it there. Now, remember guys, I'm not going to give you any I'm not revealing any of my personal strategies out. That is of course part of my community. So if you're interested, click on the link in my description below to look at my community strategy. But essentially, I'll be looking to place an order here on this pair, right? And the reason being is because we've tested this support zone, as you saw many times, and we're starting to see momentum up. So for me, I'm looking for a long order here, right? So again, let's see what happens. I would have placed a pending order here, a buy limit order. Right, we would have got tagged in, almost taken out, as you saw here, guys. And let's see what happens after that. So we pushed up, we got a nice good candle here. We saw a wick to the downside, showing lack of momentum to the downside. So let's continue what's happening. Right, we're starting to push up, right? So currently, at the moment, we're running at around 1.67% in profit, okay? So let's continue to see what happens. Right, we're seeing some nice momentum here, guys. Can you see that? We've got a nice push here, right? So ultimately, this could fake out and absolutely take me out. That is fine, but ultimately, it meets my rules, so I'm happy. I've not locked in any profit personally yet. but again, I'm looking to see what happens. Right, now guys, this is where the importance comes in of this video. So like I said before, trade management and trade exiting rules, right? If you guys are using Fibonacci, okay, you guys, for example, would have seen this downtrend. You would have seen, okay, we started to move up, and you would have started to apply your Fibonacci extension. So let's say, for example, we've applied a Fibonacci extension from here to here, right? You can see that right here, we've got this, okay? So let's see what happens if you guys are trading Fibonacci. Okay, let's say, for example, even if you entered at my location here, or you entered at a location here, we're gonna see what happens and see if it even reaches these kind of golden levels, right, of Fibonacci. Right, it doesn't, right? So for example, this is a key example here. If you guys are trading Fibonacci, right, and you entered where I'm entering now, you would have said, okay, I would look to exit at either the 0.27 extension or the 0.68 extension, as you can see here, or 61.8% extension, right? So here, you would have exited with a 4.09% risk to reward ratio. To be honest, that is not bad at all. Happy days, good trade, right? But let's continue to see what happens. See, for you guys, I don't know if you guys have decided you're either going to stick to 0.27 or 0.68 extension, but as you can see, we're continuing. We've come up and we've hit the 0.68 extension, right? Now, for those again, like I said before, if you're using Fibonacci and your exit strategy is to hit the 0.68 extension, you would have taken about 5.57% here. That is absolutely fine, right? But guys, remember, this is all about playing the trades again and again and again, okay? So you would have ultimately exited this trade. This has been a very good trade. You can see that we had a breakout here and we're continuing in this direction. And you would have ultimately left with a maximum of 5.57%, which is not bad at all. I completely get that, right? But again, this is the problem with Fibonacci, right? Because it's telling you to exit in a certain level, right? But again, remember, as a trend trader, we want to be managing with the trend. So for me, I'm looking at the lower high. So we can see that, okay, we've got lower high here. Sorry guys, I'm going to take that out. We're moving it. We're looking here to have the trailing stop loss here. Move the trailing stop loss here. Now we're continuing with this momentum. So for me personally, even though you guys would have exited this trade at 5.57, my kind of locked in profit here would be 2.14, right? Now again, remember, this is where the emotional side of trading comes in. You guys would have remembered this saying, great traders let their winners run and cut their losses short, but average traders or bad traders let their losers run and cut their winners short. Now to me, using this kind of Fibonacci extension is it's cutting your winners short, right? And the reason being is because you guys can clearly see that we have started to trend, right? So guys, let's see and continue. Let's continue to see what happens, right? So as we continue, we can see we've had a long wick, right? Now, what does a long wick tell you? You guys would have thought, okay, a long wick tells me, okay, we're likely to reverse, right? But again, it's a warning sign. It's not a guarantee that we're going to reverse. It's just a warning sign, right? So you would have thought, oh, I'm so glad that, I exited at this point because now we've seen a long wick, we're going to reverse. No, that's not always the case. Guys, let's see what happens next. Let's see and continue. So moving down, formed a little wick to the downside, showing some momentum to the downside. But again, look guys, now we're seeing wicks to the downside, right? So what's likely to happen at this point? We're likely to continue the trend up. And you can see, great guys, now we've broken this high and we've seen this. So for me, again, managing with the trend, you can see, okay, right now I would have put it here because again, it's a trailing stop loss with the trend. I'd have locked in 4.64% and the trade would be running currently at 7.34, right? Now guys, I'm going to essentially continue this, right? Continue this bar replay and see what happens. Remember guys, if you were using Fibonacci, you would have essentially stopped there. But look, let's continue to see what happens. You can see guys, this continues to trend up. So as we can see, I would have put my stop loss here, trailing stop loss here, and we would have moved this up. And now we would have locked in 6.41%. Guys, can you see how this management rule is so powerful, right? Not only as a trend trader, we're managing with the trend, but we're getting rid of emotion, because ultimately if the trend decides to discontinue, we can see we've got a large wick here. If the trade comes down here and takes us out at this level, we would have left with 6.41%, but ultimately our emotions will be intact because we've let the market decide when to take us out. We're saying, okay, we're now with trending up, right? And if all of a sudden we've had a trend change, then we want to start to look for opportunities going down. Why would we want to be part of a trade that is in the opposite direction to the trend. We're letting the market decide when or when not to take us out, right? So guys, let's continue to see what happened. Remember guys, this is an example if you're using Fibonacci, like you could have taken profit at your 1-to-1 or 1-to-3 risk to reward ratio that would have been here. At this level here, you guys would have seen, oh my God, I'm up 3%, time to take it out. That's a great risk to reward ratio, right? But guys, as you'll see, I want to quickly continue this and see where this went. As you guys can see, okay, we've come down. Again, broken the high again. So my stop loss for me would have been moved here, right? And I would have locked in again, here 7.7%, right? Let's continue to see what happens. Move down again, and we've broken this high again. So guys, you can see, look at what is happening. We are in this really nice trend. What would have happened next? Again, this is to do with patience, guys. If you're in the market and you're saying you're in a winning trade and you're saying it's up 3-4%, right? But guys, and you're taking it out at that kind of risk to reward ratio, that is you thinking that a risk to reward ratio of 3 or 4 is good. Now, I can't judge that. It may be good depending on your backtesting results. But for me, like I've always told you, I'm a trend trader. I will always manage with the trend. A trailing stop loss is the most powerful and best way to manage a trade, because it manages with the trend, and ultimately you let the market decide when to take you out, so you don't have any arguments when it comes to emotions and essentially taking percentages when you have left percentage on the table, right? Like I've shown you before, you would have taken some 5.48% here, and the trade is currently running at about 15.02%, right? So guys, let's see and continue what's going to happen. We can see that now my trailing stop loss would be at this level here. I would have locked in around 10.27%. So guys, we know that I'm going to get rid of the Fibonacci here. You can see that. Guys, you can see this is why managing with a trend is so powerful. So let's continue to see what happens. We've come down here, and again, we've just broken the high. So again, I would have been locking in more profit, guys, okay? Now, this will just continue on, and I want to be continuing to manage the trade with the trend, right? So we've got 13.12% locked in, and we're going to see what's happened, what continues to happen, because I don't want to make this video too long. We had the weekend break. We've broken the high here. Again. So again, I would have locked in more profit down here. I would have moved this over. Again, this is what the whole idea of letting your winners run and cutting your losses short comes from, because don't cut your winners short. If there's a trend, like we know, we can clearly see in this pair, we're seeing a very nice trending market. Why would you want to cut it short at the 0.27, 0.68 extension? Like I say, if it's part of your back testing and it works, go ahead and use it. But if you're struggling to find consistency when it comes to RR ratios and you're cutting your winners short, then this to me is always going to help managing with the trend. Okay, so guys, let's continue to see what happens, and let's see where we would have been taken out of this trade. Right, okay, so guys, to me, as this broke this high, I would have been taken out around this level here, right? We can see that we've taken out by this wick. So ultimately, guys, with this trade, I would have secured around 16.32%, right? All because I managed with the trend. Now, guys, this is an example that is very, very nice and clear. We've got one of the most perfect and easy trending markets here, right? It was absolutely beautiful trade. And of course, as you guys know, it's not always going to be like that. But the point I'm trying to make here is that when you're using a trailing stop loss, like if you did baby pitch, you would have learned that it is extremely powerful, because not only number one, you're letting the winners run, because it goes with that saying, but number two, you're essentially have no arguments when if it comes for the trend to take you out. If the trend takes you out, that's happy. Look for shorts, because the trend is starting to change direction. But you have no arguments, no emotional arguments if you take your profits out short, right? So this was an absolutely great example. You could see that we managed with the trend and we locked in so much more percentage rather than the 5.48% of the Fibonacci extension. We ultimately locked in 16.32, so over 3 times more than that. Now, for those of you guys that actually risk 1% per trade like myself, you would have had to have over 16 losses to get back to break even. This would have put you up at a major advantage, major percentage, but of course major money too, right? So again, this to me has always been the most trade management and trade exit strategy by far versus any others. So this is what I use personally. And to me, if you guys are struggling with cutting your winners short, to me, try and identify and backtest how a trailing stop loss works well with you. Of course, it works well with trend traders. If you're a range trader, then it won't work well, but of course you will be able to manage and take profit at different support and resistance zones. But for me, this has always boded well for the reasons just shown. Guys, I'm gonna end this video here. It is very, very clear what I wanted to say in this video. If you guys are struggling with this kind of mentality where it comes to strike rate, people are telling me my strike rate is high, but my RR is low. To me, strike rate has never mattered. And in fact, the honest answer is for me, my strike rate is low. I actually take a lot more losses than winners, but because I'm able to manage with the trend, and because I'm a trend trader, I let my winners run and they cover the losses by far, okay? So guys, I hope you enjoyed this video. If you have any comments on this video, please message me down in the comment section below. But if you haven't subscribed, please subscribe, hit the bell icon. There is plenty of great content on my channel. You will have seen that not only from this video, but ultimately the videos on my channel, so feel free to check them out. But for now, guys, I hope you have a fantastic trading week. Take care and peace.